Hi everyone, welcome back. This might be the most important video that I've did so far. In this video, I'm going to be providing you the 7 tools that you need in order to handpick your own stock. So basically giving you the ability to shade a very high potential stock compared to a share stock. Furthermore, I'm also going to be providing you an additional tools to simplify this whole process. So stay tuned and watch until the end. Now, for those who don't understand 100% what is investing, then I highly recommend to pause this video and watch this video where I actually explain what is investing. Now, for those that haven't yet invested anything and still contemplating, then I will highly recommend to watch this video where I actually explain and provide 5 reasons as to why you need to go and start investing in stock. So the first tool that I'm going to be explaining to you guys is something called technical analysis, or TA. Now, if you were known in high school or university as a geek, or you love math, this might be for you. So technical analysis is all focused about analyzing supply and demand and looking at price history to be able to spot a pattern, a trend within the chart. So using those 3 parameters, the investor, the analyst is able to decide when is a good time to buy and when is a good time to sell. So basically trying to figure out the support level and the resistance. So this is, for example, one of those tools. Now let's look at the second tool. Now the second method that is also very used is the PE, or in simple terms, the price to earning. So price to earning is a method very commonly used within investor or analyst, would actually take the price per share and then divide it by the earning per share. So if they have a very low PE, that basically indicates it's a very good opportunity to buy a specific stock. So this is another tool which is very highly recommended for you guys to look at. So let's look at the third. Now the third method is highly used. It's called EPS, or earning per share. So this is something that investors tend to look at because they want to make sure that the share they're gonna buy is actually giving them a very high earning. So the higher the earning is, the more valuable the share will be. So actually it's very simple. If you want to simplify it, is you want to invest in a store and you want to make sure that the revenue is high. The more revenue the store make, the more the store is worth. So this is actually a very simple way to look at it. So if you are looking at the stock and you're looking at it, then think about that example. All right, let's look at it. Price to earning growth ratio, or in simple term, the PEG ratio. So the PEG ratio take into account the PEG looking at dividing the last 12 months growth of the company. Based on that, you have a number. Now let's try to simplify, because I'm pretty sure whenever I first heard about it wasn't that simple. So let's look at this in a simple way. So let's look at a company. Let's assume the company for the past 5 years had a 10% growth, and for the past 5 years the company stock price went up on approximately 20%. So you look at the growth of the company was 10%. For the past 5 years, the company grew, stock price went up by 20%. So based on that, you might feel comfortable by looking at the data that the company might also perform the same moving forward. Now, saying that, there's obviously many other variables that might affect the price valuation of the stock. The market, the economic, new competitors, scandal, issues. So there is obviously many things to look at, but just to think about, this is how people look at it. The fifth method that I'm going to look at is the book value. The book value is, in simple terms, is basically looking at a company liability and asset. The lower the liability is, the more positive and attractive the company and the share will be for an investor. So what are the investors looking at? They're looking for a book value per share which is actually very low. So simple term, you're looking for a company that can sustain a closure, or if they were to go bankrupt tomorrow, they can actually pay off everyone. If they won't be able to pay everyone, then obviously some investor will maybe not choose this company. So again, this might not be the strategy or the method to focus on your investment strategy, but it might be a complementary method for you to actually decide and reinforce your decision. And then we have the sixth one. The sixth one is most likely will be for people that are actually looking for dividend. So it's called the ROE, or return on equity. So this is basically, it's a way to measure the company performance in regard to share and how much you're actually getting in return. So for every share that you actually own, how much on average dividend the investor will get. So looking at the history of a company, you want to look at a company that have a very strong ROE. So basically that will give you a bit more you feel more comfortable to invest in this specific stock. So if your strategy is to hold the stock for the long term and to basically ride the wave and still be able to get some dividend from the specific stock, this is the tool that you want to know and use in order to base this decision. Please bear in mind that not every company or every stock will give you dividends. It's actually very important to understand what is the company policy when it comes to dividends. So this is probably one of the most important, or the most important tool that you need to know if you're actually looking to invest in stock that give you dividends. So you need to look for that ROE. Now let's move to the last one. This is the final method that I highly recommend you guys to use. This is the tool that you need to use in order to validate all the 6 other tools that I mentioned above. It's called analyst recommendation. Now, yet again, we are just beginners. We might have certain idea, certain strategy, but it's obviously good to have an expert, someone that has been proven right for many years with their own analysis on some stocks. So this is someone that will probably give you some detailed information about if it's a good time to buy, hold, or sell a specific stock. And they also usually give you some price target as well. Furthermore, certain websites also give you some more information in regards to if there is any big player that has been purchasing recently or in the past quarter this specific company, or if there's other big player that has been selling off this specific stock. So I hope this summarize everything for you guys. So again, let me try to do a recap. So I did give you guys 7 tools for this specific videos, but please bear in mind there are many tools you can actually use for the purpose of picking your own stock. Now I have handpicked the specific 7 because I feel that these are the most crucial tools that you need in order to invest in stock for the long run. There are better tools that might be more suitable if you're looking for maybe more day trading, or if you're looking to buy today or sell in a week. Now the tool I provide should not be used separately. You should probably maybe find maybe 2 or 3 or 4, even maybe 5, even maybe all of them, to help you to decide what stock you actually feel more comfortable with, or what is the winning stock for you. Now please take into consideration, you need to obviously follow your own intuition. So let's say you believe that the next big thing is healthcare, for example, or a company that focuses on curing like disease like COVID-19, for example, which has affected everyone in many different aspects. So this is your current intuition, so you can obviously follow maybe 7 specific, look at the 7 method I have highlighted in this video, and from it you can obviously decide which one you feel more comfortable, which one follow your strategy. Now again, I'm not a financial advisor. Please feel free to do as many research as possible. I'll be providing in this video below the links of the tool that you can actually use. And furthermore, most of the tools do not need to manually calculate all this information I have mentioned here. You can literally go to certain financial website. You can actually find all those PE ratio or the return on per share. All this information are just there for you. You don't need to manually calculate. So the thing is, you need to know what you're looking for and basically decide if this is a good investment or not. So I hope this video was very clear and very helpful. If it was, please subscribe and give me a positive thumb up. Until next time, bye bye.